Support for Arkansas Week provided by the Arkansas Democrat Gazette, the Arkansas Times, and Little Rock Public Radio.
Hello, everyone, and welcome to this week's edition of Arkansas Week. I'm Chris Kane. Our main focus will be on the current state of the economy, and we'll be joined by two local economists in just a few moments to share the latest. First, we're joined now by United States Congressman French Hill, who represents Arkansas's 2nd District. He serves as the chair of the House Financial Services Committee and has been a vocal figure in recent congressional conversations about the national budget, debt reduction, and trade policy. Congressman Hill also been active on the environmental front, recently leading a successful push in the House to expand the Flatside wilderness area in central Arkansas. Congressman Hill joining us in D.C. on Capitol Hill, and we'll start with this. Thank you so much for the time. I know you are very busy up there. Let's get right to the economy. It's on the top of everyone's minds, and I'm sure when you come back to the state, you get a lot of questions about it. How would you describe the current state of the U.S. economy as we move into mid-2025? Are we headed in a stable direction?
Well, Chris, it's great to be with you. Thanks for the invitation. I think the economy remains strong when you're looking at the employment numbers. You see employment shifting to the private sector. I think that's a positive sign in the first quarter of the year. I think GDP was slightly down in the first quarter, primarily due to the uncertainty around the Trump tariff policy, where many companies front-end loaded imports into that first quarter, which reduced gross domestic product. But overall, I think the economy is strong, and that's why the Federal Reserve has chosen not to reduce interest rates. We still see economic growth, and we still see a bias towards inflation higher than the Fed's target.
As chair of the Financial Services Committee, you've been a part of those key budget and debt conversations. What practical steps do you believe Congress can take this year to begin reducing the national debt?
Well, the main thing is when you're in a hole to try to stop digging. And what's happened since the pandemic is we've added trillions to the debt. During the pandemic, on a bipartisan basis, the Congress spent well over $5 trillion trying to cope with the pandemic. And then President Biden, when he came to office, authorized $6 trillion of new spending programs. This is on top of back in 2019 of about $4.5 trillion that we were spending annually. So the goal in this Congress is to lower that slope of spending growth, try to move as many spending accounts as we can back towards that 2019-2020 spending level. So that's our goal. It's very hard to do, as you know, when you have so much embedded federal spending in so many programs. But that's the goal for the year.
You've spoken about returning to a pro-growth income tax system similar to the 1920s model. What would that look like today, and how do you think it would affect an average Arkansan?
Well, the Ways and Means Committee, as we taped this interview, completed their work this week on extending the 2017 Tax Cuts and Jobs Act, which keeps rates low for our Arkansas families. And one of the best things about it is it increased the standard deduction, which was inflation adjusted from 2017. This means like 9 out of 10 Arkansas families can take the standard deduction and make it a lot easier to file their federal income tax each year. And there was a $2,000 increase in the child tax credit, which I think also will help a lot of our families in Arkansas. So keep rates low, block a 22% rate increase on our families if the Tax Cuts and Jobs Act had expired, and benefit families through an inflation-adjusted child tax credit. So I think that's a style of a pro-growth tax policy for families. And for business, we kept pass-through rates low, which is for most of our Arkansas small businesses or pass-through entities. They would have had a 40% tax increase if we hadn't approved extending the 2017 Tax Cuts and Jobs Act. Both those things, I think, are pro-growth.
And you recently wrote an op-ed highlighting the historical evolution of U.S. trade policy. What were some of the lessons from that history do you think that Congress and the current administration should apply now, particularly when you talk about those returns of global tariff strategies?
Well, I think President Trump's big picture issue of trying to bring more production back to the United States, particularly in sensitive national security areas like semiconductors or steel and aluminum, having critical mineral processing here in the country, those are important goals, but they can't be accomplished overnight, and they won't be accomplished through a tariff-only approach. So as I was in 2017, I'm not a big fan of across the board tariffs. My views are well known about that. My views are well known with the president and his advisors about that. I believe that we should have a very narrowly crafted tariff policy to get change from another country like India, for example, or to open up markets for our products, as was in the case with the president's recent announcement in the United Kingdom. Those are both appropriate ways to use tariffs to obtain change. And I think that's ultimately, in my view, where the president will head with his trade policy.
In that same op-ed, you supported restoring the Trade Promotion Authority, or TPA, to the president. How would that improve America's position in negotiating future trade deals? And what do you think some of the safeguards should be put in place when it comes to Congress having some level of oversight?
Yeah, great question. Trade Promotion Authority, the Congress has used since the 1930s to delegate tariff and trade negotiation policy to the executive branch, to the president. And so the last time we used Trade Promotion Authority was President Trump's very successful improvements to the North American Free Trade Act, or NAFTA, when he created the USMCA, the United States, Mexico, and Canada Agreement, which improved NAFTA. That was used with Trade Promotion Authority. But unfortunately, President Biden let Trade Promotion Authority expire back in 2021. So one of my key components in the op-ed that I wrote is I think Congress should reauthorize Trade Promotion Authority. That will give the ability to the president to negotiate new, broad-reaching, far-reaching trade arrangements, like expanding the agreement with the United Kingdom or expanding a big agreement with the European Union, for example. You would want Trade Promotion Authority.
Let's pivot to Arkansas for a moment. The Flatside Wilderness Area expansion recently passing the House, and I believe we talked about that last time you were in studio. Walk us through what this means for Central Arkansas, why this redesignation is so significant in your opinion.
Well, 40 years ago, President Reagan signed into law wilderness areas inside our national forests for the first time, and that witnessed a huge increase in visitors to the state who want to experience a rugged backcountry experience. Arkansas is the most beautiful state in the central part of the United States, and we attract backpackers, hikers, climbers, paddlers from all over. And part of that attraction are these wilderness areas. The only one in central Arkansas, just an hour away from downtown Little Rock, is Flatside. It's 10,000 acres now, but my bill, which passed the House by voice vote this week, adds 2,000 acres to it. And it's some of the most pristine wilderness and rugged country that we have close to Little Rock. And the beautiful thing about it, Chris, is you can hike from Pinnacle Mountain in the suburbs of Little Rock all the way to Oklahoma. And when you do, on that 220-mile hike, which I know is on your list to do, you pass right through Flatside Wilderness Area, and it's a spectacular addition to the outdoor recreation menu that we have in Central Arkansas, and I think fits perfectly with Governor Sanders' focus on outdoor recreation and outdoor recreation entrepreneurship.
What's the likelihood of this passing in the Senate?
Well, in the past, we've had success there. I've had two other bills that improved Flatside in the past 10 years. And in both instances, our Senator John Bozeman helped me work those through the Senate. So that'll be my task over the next few months, is to collaborate in the Senate and see if we can get this signed into law by President Trump.
Well, you have support from a fellow Arkansan, but also getting bipartisan support. And in 2025, you know how significant that must be. What's it like seeing fellow congressmen from across the aisle also come together to support something like this?
Look, outdoor recreation and conservation is a strong shared bipartisan view in the Congress, in my view. And Bruce Westerman, our great chairman of the Natural Resources Committee, my colleague, our congressional leader from the 4th District in Arkansas, Bruce has done a great job in promoting outdoor recreation and using our public lands in a more effective way. And I was glad to have his help on this. But as I say, this is a nationwide priority for members of Congress from both sides of the aisle.
And you've been personally involved in this legislation for a while now. What does it mean to see it clear those hurdles, the first couple of hurdles, and also be renamed to honor your predecessor?
Yeah, this has been a 40-year task for me. I was a young staffer on the United States Senate staff in 1983 and 1984 when then Senator Dale Bumpers and my predecessor, Congressman Ed Bethune, worked on the first laws around wilderness in Arkansas, and particularly on Flatside. It was a real treat for me back in 1984 to see it signed into law. My boss at the time, Senator John Tower from Texas, a Republican, co-sponsored the Dale Bumpers bill to promote Arkansas wilderness, much to the absolute mystery of everybody in the Washington press corps. And now, 4 decades later, to see this bill rename the area and honor that incredible work by Ed Bethune, it's a win on both sides. And I'm so privileged to know Ed and have worked with Senator Bumpers as well to see this come to fruition.
Well, congratulations on clearing that first hurdle for something you've been working on for quite a long time, and we'll be following it as it continues to make its way through the Capitol. That is Congressman French Hill from the 2nd District here in Arkansas. Thank you so much. We know you're busy and you got to run. We appreciate your time, and we'll talk with you next time. Thank you, sir.
You bet.
All right. We'll be back right after this. Stay with us. Welcome back to Arkansas Week. Markets are reacting to shifting international trade developments. Arkansas's Treasury just posted record interest earnings, and legislative tax policies continue to shape the state's fiscal outlook. Let's unpack what that means for growth, inflation, and the state's long-term economic trajectory. Joining us now for our economic roundtable are two of Arkansas's most respected economists, Dr. Jeremy Horpedahl, director of the Arkansas Center for Research and Economics at the University of Central Arkansas, and Dr. Michael Pakko, chief economist and state economic forecaster with the Arkansas Economic Development Institute at UA Little Rock. Gentlemen, welcome back into you both. We met just a short time ago, and we were talking about all the changes just in the last time that we met right here in this studio. So let's talk about the most recent change that has certainly impacted things, and that is the U.S. and China announcing a 90-day pause on reciprocal tariffs, markets rebounding from that. Now, let's start with you, Dr. Pakko. From your perspective, how meaningful would this pause be in trade tensions both nationally and at the state level?
Well, you know, the pause in the reciprocal tariffs that took place April 9th was a relief to the markets. That seemed to be a very big fear that those would actually be implemented. We're still having that hang over our heads, although markets have generally recovered. You know, I'm not complaining about the fact that my retirement account is looking okay again. But the fact of the matter is that we're ending up on the other side of this divide with significantly higher tariffs than we had before. Just this week, the budget lab at Yale came out with statistics saying that the effective average tariff for the U.S. has gone from 2.4% last year up to now 17.8%. And the case with the deals with Great Britain and with China, both we end up in the situation where tariffs are much higher than they were before this all started. So that seems to be the direction we're headed. And so we're not out of the woods yet when it comes to the effects of those tariffs on the economy. And there's still that uncertainty about whether those humongous reciprocal tariffs are going to be coming back.
Yeah, the question surrounding that, certainly something to monitor as it was just announced. Let's talk about that, Dr. Horpedahl. As far as the state goes, we know that there are several sectors in the state who are probably saying that's a sign of relief, getting this pause to maybe get something, figured out, negotiated. What state sectors are you seeing right now that were most impacted by those tariffs, and which ones now can at least expect a little relief in the short term?
Yeah, I think we always think about the agricultural sector first. I think that the big worry there is that there will be some sort of reciprocal action placed on U.S. industries, including Arkansas's ag industry. So I think that's something that we're continuing to monitor that. I think that a lot of manufacturing, we think of being protected by tariffs, but a lot of manufacturing is using inputs that will then be subject to those tariffs. So I think that's, if you look at manufacturing in Arkansas, that's another area that I think we are still worried about what those tariffs might eventually be as we think about what the cost on the inputs for manufacturers will be as well.
And as a follow-up, do these pauses maybe ease some of the concerns about potential recession or risk for a potential recession, at least in the short term?
I think they do in the short term. I think it's a little too early to know exactly how much of these pauses will last and how much whether there will or won't be a decline in GDP this quarter, because we're still so early in the quarter. We're about halfway through the quarter, but the data we have is always has a lag. Retail sales data just came out this week for April, and that was pretty much flat, whereas usually it's up 1 or 2%. So I think we are still seeing some signs of a slowdown, but it's hard to tell whether some of the spending you're seeing is it people trying to get ahead of the tariffs, or is it actually the tariffs are now dampening spending. So I think the data is a little too murky right now, but I think that's something that certainly there's less of a chance of a recession now, I think, without the 145% tariffs on China. But still, there is still some risk.
I'd just like to point out that it's a very difficult time to be an economic forecaster right now. The point estimates of the major forecasts aren't changing all that significantly as we go through all these ups and downs. But what is changing is the error bands, the uncertainty about those forecasts. And so that's why you see statements from some leading forecasters saying, well, the probability of recession has increased. The probability of not recession has probably also increased too. There's just more uncertainty about it altogether. So it's a very difficult time. I mean, these tariffs being across the board, affecting all countries, all goods, really unprecedented. Really, we haven't seen anything like this since the 1930s, the Smoot-Hawley Tariff Act then. The forecasting models don't have a lot of experience to work with in trying to come up with a prediction about how this is all going to affect the economy. But the cost of inputs to production domestically, as well as the cost to consumers and final users, they're real and they're coming soon.
And I think following the stock market, I think, is useful, and I follow it closely too. But I think, when you look at the stock market, that's a reflection of expectations about long-term profitability. That does not tell you whether a recession is coming now. So, stock markets generally are back to about where they were at the beginning of the year, which is good. That stock markets are not that worried, but that's more of a reflection of long-term outlook. Rather than whether we'll have a recession this year.
It is also the gauge we always use, right? Whether right or wrong in the short term.
You get a reading on it every single day.
That's it. It's at the end of every broadcast. It's always talked about. It's all over social media. So it is kind of on the forefront of everyone's mind as far as what is the indicator to use for a strong economy, when you both know there are so many underlying factors that have to come into play. I want to talk about the state's delayed tax deadline for a moment, the severe weather. Allowing for a little bit more of a timeline to get those in. But how could this affect maybe some budgetary concerns or budgetary planning moving forward? I'll start with you, Dr. Horpedahl.
Yeah, so in the latest revenue report for April, the April data was lower than was forecast. And April's usually a big month for tax collections. That's when a lot of people are paying in, waiting until the last minute to pay. But it wasn't that much lower, it's maybe 10%. And the total year to date is actually above forecast. So the fact that the year to date is above forecast for state revenue suggests there probably aren't any huge budgetary issues right now. Tax receipts come in kind of lumpy. They come in different months, whereas spending is more stable. And the deadline now is in July for most people. It's been pushed back to. So, I don't think it'll cause any major problems. And if there is, the state has two large reserve funds with $1 or $2 billion each in those that they could tap into. But I don't think there is, given that it is lower than last year. But overall revenue is near what it was forecast to be.
It can be tough to be a forecaster. It's that just adds to it, doesn't it?
Certainly. I mean, the delays in the tax payments might end up affecting fiscal year 2026 revenues. So, that'll all work out in the wash. And I'd just like to point out that even if the state ends up breaking even this fiscal year, there's already a $279 billion surplus built into those projections. So there's really no reason to be concerned about a budget shortfall or inability to have the proper revenues, but it does make it more difficult.
Provided there's no recession.
Provided there's no recession.
Or just some slowdown in consumer spending, right? That's going to affect sales and income tax data. So.
And then you have the issue of if consumer prices are rising because of the tariffs, that's going to affect sales tax receipts as well. So, you've got all these forces working.
Let's talk about this for just a moment. The state just posted a $102.3 million in interest earnings last quarter. That outperformed benchmarks. So what do you make of the state's Treasury investment strategy when you have these type of unpredictable factors to deal with?
Yeah, I think that the state's money is generally invested in bonds and other short-term cash-like investments. So I think that the stock market volatility is not going to affect it that much. But bond markets, while they performed well in the first quarter of the year, which is what this is for, bond markets haven't performed well, since the beginning of April. So I think that the first quarter data looks good because the state's money is invested very conservatively. They're expecting, a 3.4% return or so generally. So that hasn't been affected yet. So yeah, the numbers have been record high, but it's still, this money is invested very conservatively because it's money that they're not hoping, it's not where they're trying to make money off this. They're not trying to invest in the S&P 500. It's extra cash they're trying to get at least some return on.
And more generally, the Federal Reserve has not been cutting interest rates at the pace that was anticipated several months ago. And so that's been kind of a windfall for anyone who's investing in bonds, as those interest payments are remaining elevated. And, given the latest tea leaves reading from Federal Reserve, it seems like they're going to be on hold for a while now, just waiting to see what the data show about the impact of the tariffs on both consumer prices and the real economy.
Yeah, and Walmart just announced this week that they expect that this month and throughout the summer they are going to have to start raising prices in response to the tariffs. Even though some of them have been paused, the big ones from China have been paused, but there are still effects. It doesn't mean they're all gone. So Walmart, of course, not only important to Arkansas, but biggest retailer and biggest company in the world, has said, yes, we are going to now start raising prices in response to this. So that's many other companies will follow.
So a couple things, right? That impacts people's pockets immediately, right? For folks who shop at Walmart, and many do, obviously, largest company in the world. But the other thing you just mentioned too, Dr. Pakko, is just the fact that there was an expectation of about 8 to 9 cuts this year. There have been 4. And Federal Reserve just recently mentioning too, they're kind of waiting and seeing. Is that the overall sentiment in your opinion? Everybody is just kind of waiting and seeing what's going to play out from some of these trade wars?
That's pretty much the sentiment. I don't know what the alternative is, because things do seem to be changing from day to day. I saw a forecast recently that was made the day before the reciprocal tariffs were delayed. And of course, you have to take that with a grain of salt. I mean, how does that situation change just in the past day or two?
Yeah, waiting and seeing on tariffs, waiting and seeing the other data too. They aren't seeing things like inflation has been kind of stuck at about, the high 2-point-something% for months now. They want that to come down before they cut rates. Unemployment's not going up, so that they're not worried on that. So they're waiting on a lot of things in addition to what's happening with tariffs, and of course it's all connected.
Yeah, we didn't see anything really in the April CPI report. I know you look at that very closely, but that is likely to change in the coming months. And this quarter is probably going to have a significantly elevated increase in prices.
Which is just another reason they wouldn't cut rates more.
Yes. Not that it's necessarily inflationary, but it just gives the kind of a wrong signal to when prices are rising to cut rates. So it puts the Federal Reserve in a bind as well as to what to do.
Well, let's talk about fiscal year 2026. You mentioned it just a moment ago. Additional tax cuts, more spending on education in the state, possibility of a special session. What are the key risks and the key opportunities for the state facing Arkansas's economic outlook right now? Start with you, Dr. Horpedahl.
Yeah, I think that in the past few administrations, they've wanted to do a special session to do any big tax changes. So that's what we're looking at, maybe that happening in the second half of the year. I think that depends on what the revenue numbers look like, right? So, and it's going to be a little cloudy because of the delay in tax payments. But I think that is something which the Sanders administration has really said they do want to continue that. So I expect there'll be some other small income tax cuts. And I don't think, most likely, it's hard to forecast right now, but most likely there's probably not going to be anything in the macroeconomic data that will change, what they're going to be doing with that session.
I think more generally, I think our state is in a fairly good position. The national forecasters are saying there's a much higher probability of recession, but even if those terrible forecasts come to pass, Arkansas has a lower unemployment rate than the rest of the nation. We still have high vacancy rates. Our labor market is strong. We've been adding jobs. So, things are likely to deteriorate along with the rest of the nation, but we're in good shape, at least for the time being.
Well, we appreciate both of your forecasting, even though it is certainly a tough time to do that, but also just your feedback that you can share with our viewers is always extremely valuable, and thank you for your expertise to share that on set with us today. We appreciate you. Dr. Michael Pakko and Dr. Jeremy Horpedahl, we look forward to talking with you again soon. Thank you.
Thank you.
All right, that is all the time we have for Arkansas Week. We'll see you next week.
Support for Arkansas Week provided by the Arkansas Democrat Gazette, the Arkansas Times, and Little Rock Public Radio.